Hello, everybody. Welcome once again to Real Wealth Network's Thursday afternoon webinar or noon, wherever you are. Maybe it's the morning, who knows? But for me, it's the afternoon. Today's April 2nd, 2019. This is Ben Smith. I'm the Investor Relations Director and Investment Counselor. Happy to have you with us. We're going to talk today about Dallas-Fort Worth. Fun market. Really like it a lot. And if you sign up and do a session, then you'll be able to attend the Thursday webinar as well. And we'll get into the details of that in just a minute. So upcoming in 2 days from today, we'll be doing the part 2 of today. Today's kind of the intro overview. And then on Thursday, we'll actually have the affiliate for the Dallas-Fort Worth market. They'll be talking about actual properties that they have and going through a lot more of the granular details about the market. And then next week, we're bringing back our Central Florida market. We've got an affiliate there that we used to use quite a bit, and she's coming back, and she's going to talk about mainly new builds, doing some new construction all over Central Florida, from just east of Tampa all the way kind of through the central part of the state. And so she'll be doing it on Thursday, and either me or Joe or somebody, probably me, will be doing it on Tuesday, just kind of the same thing as today, talking about the overview. All right, our live events coming up on the 4th of May. We're going to be in Northern California, San Mateo, from 11 to 4. And then on Sunday in Los Angeles from noon to 5. It's an hour longer this time than it usually is, because as you can see, there's a lot of things going on. We've got Huntsville and Montgomery, then we've got Cincinnati, Albuquerque, Houston, Dallas, and now Central Florida. We used to have Cleveland on the market on this list. They're going to be pushed off to a later time, so we're not going to be doing Cleveland, but instead we subbed them out for Central Florida. So we've got a lot going on. Hope you can join us. If you can't, then pretty much what they're going to be talking about is what they talk about on the Thursday webinar. So all is not lost. You'll still be able to see their individual section by just watching the equivalent webinar. And if you do intend on going to one of those, try to register online in advance if you could. All right, there's me. I already kind of talked about what I do for the company. I do a lot of strategy sessions every week. I also handle all kinds of stuff. We all wear a bunch of different hats with Real Wealth Network. Been an active investor for going on 28 years now. I should probably update that slide. Did a bunch of stuff in California, Arizona. Then I since moved east, and I actually started buying in Florida years before I moved out here. And Cincinnati, Ohio, and had a house in Cleveland, and then I even have a house in Pittsburgh as well. So kind of shifting the wealth over to the east, just because that's you follow the money, and that's where the numbers made more sense. All right, let's talk a little bit about Real Wealth Network and what exactly we are. So let me kind of give a quick overview. The purpose of today's webinar, the Tuesday webinar, is more for those who have not connected with us yet. You've joined the network, you've kind of poked around on the website, hopefully a little bit, but you're not really sure what it is that we're all about completely. The Tuesday webinar, the whole intention of Tuesdays is just to give you an overview of what Real Wealth Network is, get you a little more comfortable with investing with us, and figure out what markets you like, and just kind of get the overall picture. Then after you do that, you schedule a strategy session or connect with us. That's kind of a general term. And at this point, we don't even let you attend. We won't let people sign up for the Thursday webinar unless you've connected with us. So it's really simple. After this webinar, everybody who's logged into this and is watching me now will get an email from me with a link in it on how to connect. Now, don't expect it instantaneously. The technology always has delays, but you will get an email from me shortly after the conclusion of this webinar, sometimes even before it ends, and then you can book a strategy session. The goal here is to book it for either tomorrow or Thursday morning if you're really interested in hearing the Dallas webinar. If you're like, no, I'm not so much interested in Dallas, but I'm interested in just being able to see all the webinars, then go ahead and still book a strategy session, still connect with me or one of us, but you don't have to do it tomorrow or Thursday morning because you don't care about the Thursday webinar. So I hope that makes sense. All right, so why Real Wealth Network? Well, a bunch of different reasons. Number one, it doesn't cost you a dime. We're not interested in extracting a pound of your financial flesh. That's not really what we're here for. The way we make our money is when you buy properties, the property provider sends us kind of a finder's fee, a broker-to-broker finder's fee, but we don't charge our members anything. So the number one reason is we've got all kinds of materials on the site in terms of what the differences are between the markets and what different type of loans are available and all kinds of other things. So I think it's incumbent upon you and everybody to educate yourself as much as you can because it's free. Connect when you're ready to go. And I didn't say that earlier, but we don't really want to do strategy sessions with people who are like, nah, I'm just a tire kicker. We want you to actually be ready to invest sometime in the next, 3 to 6 months. So when you're ready to do something, connect with us. And then at that point in time, we connect you with all kinds of resources. You have some resources available to you now, but you'll have a lot more once you actually do the connection. All righty, so let's talk about some of the frequently asked questions that we get all the time. First of all, we don't help our members flip houses. That we're not a flipping network. Nothing wrong with flipping, not against it. It's a great way to potentially make short-term cash, but that's not what we do. We're more kind of a long-term. You buy, you hold for the long term to build long-term wealth through a passive investment portfolio. Now, if you plan to purchase a property with cash, you need to have at least 60K because we don't have those little $30,000 and $40,000 houses. You can have those sometimes, but there's usually a lot of costs associated with those that the pro formas don't tell you about. So we started around 55, 60,000. So you need to have that much cash if you're going to buy all cash. Most people are not buying all cash. They're financing. Now, if you're planning on using your IRA funds, then you'll need to have about 50,000. Maybe you can get away with 40, but it's safer to have 50 because the banks, they like to see reserves. The reason you need to have so much is if you're investing out of an IRA, you need to put about 50%, sometimes 40, but most of the time 50% down. So, do the math. If a house is 80,000, you need to come up with 40. The banks want reserves, 40 plus 10, there's your reserves. Now, most people do this. They buy outside of their IRA with normal taxable money, and most people get normal conventional loans that require 20% down, which is much more affordable. $100,000 house, you only need to have $20,000 plus closing costs. So maybe make it 24. Right there, the requirements that you need generally: 680 credit score, 2-year job history, 20% down, 6-month reserves, low D to I ratio. To elaborate on that a little bit, if you've got $10,000 coming in every month gross, then let's hope that your debt doesn't exceed maybe $4,300 roughly. 43%, sometimes down to 40% debt to income ratio. Those things change, but last I heard that's about where it was. And you also don't want to have any more than 10 financed properties. But if you're approaching 10 financed properties, you probably wouldn't be watching this webinar, right? So most of us have under 10. Okay, our fancy disclaimer. Real estate purchases are subject to investment risks, including the possible loss of amounts invested. While Real Wealth Network uses its best efforts and proven protocols to screen, review, and understand the operations of each of its affiliates and their related companies, we cannot and do not guarantee the performance of investments through these companies because there's no way we could. We think it's going to perform. It historically has performed, but stuff happens. There's no guarantees in life. So it is the responsibility of you, the investor, to perform your own due diligence and analysis before retaining an affiliate and prior to purchasing an investment property. We require everybody to order an inspection from an inspector and order an appraisal. Now, the appraisal happens automatically if you're getting a loan. The bank will always order an appraisal. We mainly put that in there for the 5% or so that buy properties all cash. If you're buying a property for all cash, no one's going to force you to order an appraisal. So we want you to. It really makes sense. So there's all of our markets that we are in. And now these are markets that Real Wealth Network has determined are good cities or markets to invest in. The farthest west one would be Albuquerque, New Mexico. And then kind of looping around, we'll end up in Texas. Going up north, we've got Chicago, Detroit. We've got Cincinnati, Cleveland, Columbus, Indianapolis, Pittsburgh. And then going farther south, we've got 3 locations in the state of Alabama. We've got Huntsville up north, Birmingham in the middle, and Little Montgomery down south. And then in Florida, we've got Jacksonville, Orlando, and Tampa. And then looping around along the bottom of the screen to the middle, you've got Houston, and then the blue star signifies what we're going to talk about today. Blue star being the Dallas, Big D, Dallas-Fort Worth, Texas. All right, so why would you invest there? Now, the affiliate that we have been working with for years and years and years, she's going to be doing this webinar with me in 48 hours. And she has got a lot more credibility in this particular area than I do. I can read the slides. I've been there a few times. I know the area. I visited with her, but she's going to provide a lot more color commentary than I will be able to. But I can talk about some of the things right there. Steady drumbeat of upward estimation. I mean, they've gone from 6.5 million 9 years ago to 7.6 million now. That's 15% change every year. 7.6 million population. So that's always a good sign when a market just kind of keeps going up. And it's ditto for job growth, same thing, just kind of keeps going up. Looks like the pace is slowing just a tad, which is probably good because you don't want to see an unsustainable trend. But 116,000 new jobs in the period August 2017 to August of 2018. I mean, that steady drumbeat upward is by month. It's not by year. All right, so there's 2 counties that she focuses on mainly, but it's by no means limited to these two counties. Those are just the bulk of it. And you can see between 40 and 50% are renters in both Tarrant and Dallas County. And it's really business friendly. I mean, we have lots of markets. We've got Illinois, we've got Dallas, kind of opposite ends of the spectrum. And then you've got California, which we're not in, too expensive, not particularly business friendly. So I think it's really crucial to be in a business friendly state because of all these reasons you see bullet pointed, which I'm not going to read, but they're right there. All kinds of reasons to invest in an area that is very upwardly mobile. People are moving there. There's a lot of companies. Here's just but a few. Dr. Pepper, I had no idea. All right, State Farm is recently moved out of Illinois to Richardson, Texas, bringing 8K employees with them, and Toyota's moving, I don't know where in California, but they're leaving California and they're arriving in Plano, Texas, and they're bringing 4,000 employees with them. Then there's this, huge airport. I mean, obviously there's DFW. There's also other airports there, but I mean, the DFW is the main one. Love Field would be the other one, but DFW, 3rd busiest airport in the world. I know the number 1 busiest, I believe, is Atlanta. Primary hub of American, bigger than in Manhattan, which I did not know until I was told this the last time she did this webinar. And the other interesting thing, and she'll probably elaborate on, is back in 2008 when everyone was, filling the moat with water and raising the drawbridge and curling up in a fetal position, Dallas was not doing any of those things. They were pouring a bunch of money into the airport expansion and not cutting the budget, which has really paid off. Thousands of miles of highways, high speed limits. People commute all over the place, and she'll go into the details of the Dallas metro area, and you can barely see the map in the background, but the loops that go around the center of town. She's got kind of an interesting philosophy, whereas a lot of our affiliates are in the metro area, and it's more of a buy and hold situation. She'll expand on this, but she thinks, our Dallas affiliate, that it makes more sense in her market to buy for about a 5-year period. Sometimes less, sometimes a little more, but on average about 5 years. Hold on for that amount of time, and then do a 1031 out and get something else. So she'll buy ahead of the path of progress. I think I'm stealing my own thunder here. I think that talks about it in the later slides, so I'll shut up and wait till that comes up. They pour a lot of money in infrastructure. Job centers and employers are also outside of the city, so it's not so important in the Dallas metro area to be in Dallas. You can live almost anywhere in the suburbs and just hop on a freeway and zip around at 80 miles an hour. And what she's doing is she's buying in areas that she thinks are going to, and has a good track record of predicting where things are going to appreciate. Here's the big challenge for anywhere in Texas: cash flow. We've got markets like Detroit and Cleveland and Cincinnati, and to a lesser extent, even Chicago, that they have really good cash flow. And Dallas is more expensive. Texas overall is more expensive. The property taxes are high in Texas. It's just notorious for having higher property taxes. So cash flow is a challenge, and she's going to elaborate a lot on that. But one of the ways that she gets around it is by buying outside of the Dallas Metroplex. I guess it's still technically part of the Metroplex, but it's outside of the core part, where it's kind of almost become not cash flowable in the center part of town. So here's standard appreciation. This doesn't really tell you a whole lot because all three lines are pretty much parallel. The neighborhoods that she is investing in is the red line, and the overall metro area is a little bit more expensive. It includes the pricier areas are in the blue line, and the overall US is the orange line. You can see the median price is equivalently below that of the median in the US. Median of Dallas, lower than median of US. And the rents, it's typical. Rents go up slower than house prices, but they do eventually catch up and ticking up, steady eddy pace. Average rent, looking at the red line, of about, looks like about $11.50, and now it's gone up to about $14.75. Okay, so here's what I was hinting at earlier. So she doesn't generally focus in the center area. She just doesn't. She focuses more along highways and kind of outside of the metro center, cities with their own employment centers, but close enough to drive to other employment centers. So essentially, hey, let's look at a map. Where is a freeway about to be completed? Where is Google or Amazon about to put some distribution center in? How close are you to freeways? So geographical locations that are not high risk and not high crime areas. And I guess she's saying most of Dallas and Tarrant Company are high crime areas, I guess. But essentially, you grow out. If you look at a map, it looks like it's kind of far out, but it doesn't take that long to get there. And by doing that, you're getting in at a much lower price. The first year, the tax rates are pretty low because the county is still assessing it based on the fact that it was raw land, and it takes them a little while to catch up. And then in about 5 years, when it has caught up, that's when you're getting out. And so she's got a real good track record of going, okay, here's an area, I don't know, Sherman, Texas. Well, that's not a good example. Rockwall, Texas, or some other areas that a couple of years ago they were buying for 120, 125, and now those properties are selling for 150, 160, 170 in some cases. So time to get out of those and move to a place like Sherman, Texas. So now let's get into some of the examples. And just to reiterate that this is a perfect webinar for those of you who have not connected with us. After the end of this, connect with us, and then you can attend the Thursday, and she'll go into the actual details of properties that are actually available. These particular ones may or may not be, most likely are from the past. The live ones she will talk about on Thursday. But I mean, let's look at this one here. Let's look at the 80%, the column on the left, $295, down payment of probably 25%, because this is a duplex. Yeah, okay, that should actually be 25%, but whatever. Let's look at the all cash column. This is a duplex, right? So $295,000, you're going to put 25% down, but in the case of the all cash, nothing. And it rents for a fairly healthy 2550, bringing you $1,660 a month. And over there let's see, 25% would be about $14,000 more. So the cash flow is not going to be quite as good as what's said here, because you're going to have to put up 25% down, but pretty close to it. So that's a classic example of something that she is picking Sherman because it's far enough outside of the metroplex, the city of town, the city center, that it's going to get in at a fairly decent rate, but increase as infill and progress approaches that area. Now here's Dennison, single family home, 31,000. That would be 20%, which is perfect. 10% closing costs. So you're out of pocket $34,000, and there's your principal and interest of $685. Now that's an 80% loan to value, 5.25%. Your taxes are $350 a month. Again, fairly steep if you compare to some other areas that are less, but that's okay. It all factors in here, and you still have a fairly healthy monthly cash flow of $157 with an annual cash flow of $1,887. Now, if you eliminate that principal and interest, that pesky loan payment, as indicated with the N/A on the right side, then you've got a much healthier $842 a month coming in. So I'm just going to sit here for a second and let that be digested. All cash, 6.5% rate of return. Princeton, Texas, $195,000. Rents would be $1,550 a month. So, I mean, this is a more expensive area, right? I mean, I always tell people, I probably go through this 3 times every single day. We've got, within the world of Real Wealth Network, we've got growth markets and we've got cash flow markets. And the growth markets are going to have lower cash flow, but they still are going to have growth cash flow. And, you just have to accept the fact that, if I buy up in Cleveland, I'm going to have a better rate of return than in Dallas, and I'm going to have more cash flow relative to the price I paid for the home. However, the home's just going to sit there and keep up with inflation, whereas there is a much better chance, never a guarantee, but a much better chance that the prices will go up, will appreciate in a growth market, of which Dallas is one. So by buying in Texas or Florida for that matter, all those are growth markets, you are sacrificing some rate of return in return for the expectation that things will go up. Now, you're not speculating because it's still cash flowing $130 a month in the case of this house, but it's also going up in value. So it's the trade-off a lot of people make. All right, and I didn't mention this earlier, but if anybody has any questions, feel free to we're doing this live, right? So you can type them into your type question here, and I will take those at the end if there are, in fact, any questions. All right, Little Elm, Texas. Now we're going up a little bit in price here, $215,000. Down payment, it is a 3-bedroom, 2-bath. So it's a single family home, therefore your down payment can be 20%. It's only when you're at duplexes, 2, 3, or 4 units, it's only when you're there that you need to put 25% down, which was that very first example we had. All the rest of these have been single family, so 20% is correcto. Closing costs of 10% of the down. Initial cash invested on this Little Elm is $47,300, and it's renting for $1,675 a month. So you've got a fairly healthy cash flow of 137. And of course, if you bought it all cash, then you've got a much more massive cash flow of 1087. Now this one and the other one that we just saw, notice how it says pre-rehab. In other words, these are not new builds. Some of these, let me kind of go back here. This is brand new, this one's brand new, so these two are brand new, and these two are pre-rehab, meaning it was actually built back in 1999. The one before this was 2006, but still they're 10 and 20, 13 years old respectively. So these pictures are before they've rehabbed it, which is okay because I'm sure the outside probably looks pretty close, although that roof is looking like it's getting a little tired. So I'm sure they've replaced that, unless that's a shadow, but I don't think so. One other thing I always like to point out, notice how on the lower left, it says it is also recommended that buyers set aside reserves for potential vacancies and or maintenance costs. So between 3 to 6% of rent. So if it's renting for $1,000, you want to set aside $30 and $60 every month just for maintenance and vacancy, because those things will come up slowly but surely. All righty. If any questions pop up, I will take them. But in the meantime, I'm not going to do that. What I'm going to do is skip right ahead to the what's next slide. If you're interested in investing in Dallas and you want to attend the webinar that's happening exactly 48 hours from now, then you need to click on the link in the email that I will send you. There's a typo. To schedule a time to connect with me tomorrow. Now, it's a little tight, I realize. I'm sure you're busy tomorrow, but if you can try to squeeze it in, I've got some slots available. We'll go ahead and talk. It can be as little as 10 minutes or as much as 30 minutes. We kind of find out what you want to do, what goals you have, and just answer any questions you might have. And boom, you're in like Flynn. You've been given the keys to the castle. We've talked to you. We kind of try to figure out what your investment strategy is. We try to help you kind of narrow it down to various markets if you want to. We'll talk about, within reason, whatever appropriate thing you want to talk about is. And like I said earlier, if you're not so hot for Dallas, but you want to get in, then please book a strategy session. Just don't take one of the slots for tomorrow, because those are for the people that really want to attend Dallas. All righty, so I've explained Real Wealth Network, what it is, how we operate, what we look for in a general sense, markets that make sense to invest in, and then find an affiliate in that market that's doing a good job with renovating and the numbers look good and they have good property management in place. We go down, we check out those markets, we run background checks, we really scrutinize these potential affiliates, and if we like them and they like us, then boom, they can become an affiliate. Dallas is one, and we have 13 others on top of that. There's differences in the market. Every market's a little bit unique. At the end of the day, it's a house. You're investing in a blue collar, middle class, working class neighborhood, decent neighborhood house. But there are still some differences between Dallas and Jacksonville and Cleveland and Detroit and Chicago in terms of what the positives and negatives are of all those markets. So we will help explain all of that. Alrighty, that about does it for me. I don't see too many questions, so I'm going to go ahead and call this a wrap. It is 33 minutes past the hour. My name is Ben Smith. Love to talk with you. Respond to that email, click on the link, schedule a strategy session with me, or you can do it tomorrow or Thursday morning or anytime in the near future. Connect with us, especially if you're getting close to getting serious and want to build a passive income portfolio. I think it's a really good way to add to you don't want to put everything in the stock market. You just want to have some diversification, have some real estate, have some other things going on. It's always a good idea. All right, everybody, thank you so much. Appreciate it. We'll do it again next week, and we will do it again in 48 hours from now. Talk to you later. Bye-bye.